back to Fast Market here on the Schwab Network. It's time to talk Tesla. A couple positive notes out today on the EV maker. Let's bring in Caroline Wood, Senior Markets Correspondent here. Caroline, positive note out of Morgan Stanley. I don't know how much credence we should read into that one, but Piper Sandler also positive on this stock. It's having a nice pop today.
Hey there, Tom. Yes, Adam Jonas over at Morgan Stanley has been a Tesla bull for quite some time, but adding Tesla to as number one on his top pick on the U.S. autos list, replacing Ford, as you said. Taking a look at Tesla shares, they're rebounding today, up about 5% after falling 8% last week after earnings failed to impress. Those missed Wall Street's expectations, but gaining some ground today. Adam Jonas maintained an overweight rating on shares of Tesla and a $310 price target on shares. That's a street high, so about 35% upside from current levels. Morgan Stanley, Jonas thinks that Tesla's efforts to cut costs has stemmed some of the downside risk for Tesla, saying the over $0.6 billion of restructuring charges recognized by Tesla in the quarter, combined with other actions, has helped lower the break-even point to levels where Tesla can still generate positive cash flow at an enterprise level, even with EV capacity utilization at 69% last quarter. Talked about Tesla cornering the market on zero-emission vehicle credits, saying we believe as more legacy OEMs pull back on their EV plans, combined with increasingly stringent EPA standards, that Tesla may achieve an even more dominant position in the market for highly lucrative ZEV credits going forward. Also bullish on its strong position in the energy storage market, and noted that Tesla's aggressively redeploying incremental resources, technology, and people, as well as capital, away from the auto side of the house, although they obviously are still making cars. In fact, pointed out that Ford spent far more time talking about EVs on their second quarter earnings call than Tesla actually did. It thinks Tesla really is at the epicenter of the AI revolution. That said, Jonas does think that near-term expectations around full FSD and robotaxis may be too high, and they do think, or he does think, that the long-term trend for China exposure from Tesla will continue to fall systematically. So not all positive, but pretty bullish with that price target that implies about 35% upside from current levels. Shares of Tesla up more than 5% right now.
You know, it's interesting, Caroline. If you recommend Tesla like these analysts did today, and boy, I would like them so much more if they recommended them about 175 and not 230. But the thing is, for them to recommend this stock without really giving the robotaxi and all these other things that a lot of people are being bullish on, away from EVs. He's giving a recommendation or a price target raise based on EVs. Am I getting that right? And his basis is that they're getting the production down and lowering costs for EVs, because if you came out and said, "Oh, I'm bullish on Tesla because of robotaxi," boy, I would. That sounds a lot better. But this is something that's kind of going against the grain with a lot of analysts.
No, I mean, Adam Jonas over at Morgan Stanley has had that $310 price target for quite some time. So didn't raise the price target, just added it as its number one pick to the U.S. autos list. So to give him credit, it's not just, I can't remember, we talked about it a few weeks ago. He actually broke down how much is because of the auto business and how much is AI. I have to go back and check my notes, but a large portion is because he thinks that Tesla is at the epicenter of the AI revolution. So it's definitely more technology based. Piper Sandler was also out with a note today. 310, I said, is the highest price target on the street. Piper Sandler is not far behind with a $300 price target, overweight rating. That analyst did focus more of the note on FSD and actually some of the hyperbole surrounding Tesla's FSD, saying that investors have kind of learned to ignore that. Obviously, the robotaxi event was delayed from August to October. And he's basically saying that investors are kind of giving Tesla a pass for that, but said, judging based on reviews on X, the update to version 12.5 is revolutionary. So the analyst at Piper Sandler is making the case that delaying that robotaxi event might not be a ploy to distract from falling EV sales. Rather, it could catalyze a realization that full self-driving matters more than anything else for Tesla. So Piper Sandler expects self-driving take rates to inflect sharply upward, looking further out by starting around 2030. Makes the case that by the end of its 20-year forecasting period, 100% fleet-wide FSD adoption for Tesla, and says prices for it will rise too. It's currently around $99. Thinks it could rise as much as to as high as $500. So a longer-term call in terms of FSD, especially since we know that it's been delayed even further. But said, just like cheap flip phones, we don't think anyone will buy non-FSD cars eventually. So that note definitely geared more towards FSD. But to Adam Jonas's credit over at Morgan Stanley, he's been a bull for quite some time, and it's not just because of EV numbers.
Yeah, and then you have to take into account he was bullish on Ford before. That stock's down about 12.5% so far this month after their earnings. So we'll take that with a grain of salt, I think, on that outlook there. All right, thanks to Caroline Wood, senior markets correspondent, here breaking down the Tesla news. Al